Power Ministry invokes the Section 11 of the Indian Electricity Act to meet in anticipation of rise in power demand, asks all imported coal-based plants to generate power at full capacity and sell power to the exchanges.
Metal stocks surge in anticipation of further stimulus coming in China. Hopes of higher demand are further strengthened by strong weekly growth in new home sales in China.
Adani Group cement companies ACC and Ambuja restart operations in Himachal Pradesh after resolving freight-related issues that had held up production for almost 2 months.
Uflex stock is under some pressure. Sources tell CNBC-TV18 that the IT department is conducting search operations at its Noida offices with regards to concealment of income via issuance of bogus bills.
Hello and welcome. You're watching us here on Chartbusters. I'm Mangalam Malu. With me as always Nigel D'Souza. Looking good for the market. In fact, from the lows we have seen a strong recovery. And the good part is that it's the Nifty Bank which is leading the recovery, up almost 175 points. In fact, from the lows, it's higher by over 250 points. In fact, closer to 300 points from the lows on the Nifty Bank. And as a result of which, the Nifty itself is upwards of 17,900. The question is whether it sustains here or not, because if it does, then there is case for further short covering given the sort of calls that we've seen written on the indices over the last couple of days and the index future short positions of the FIIs itself. Seen a bit of a bounce. The question is whether it sustains or not. The mid-cap index, however, is up by just about 0.25%, so keep an eye out on that one. We have more stocks advancing than declining, but at an index level, it is the mid-cap index, which is a mild underperformer. Well, Nigel.
Well, Mangalam, that was a call earlier today, right? We have seen that in the past when the FIs are net short and when the PCR is coming down to around 0.74 odd, it gives you a bit of a cause that maybe we could see a bit of a bounce. For the time being, that's played out. Let's see whether or not we can see a bigger short covering bounce. Keep in mind, this is a relief rally. In all probability, at around 18,000 odd, you have still some firm resistance out there. But the positioning was that, the FIs are going aggressively net short. Call writing became too easy, and that's why we're seeing a bit of a relief rally. But let's get in Shilpa Raut for a quick technical check. Hi, Shilpa. Good morning. Good to speak to you after a while. What's the view on the index? You are seeing a bit of a relief rally. Can it extend itself? If yes, to what levels? Or would you believe that shorting at some point of time will be more beneficial? Go ahead.
Good morning, Nigel and Mangalam. Like rightly said, this is a sort of a relief rally because from the past 3 sessions, we have been seeing some sharp declines on the higher levels. But of course, Bank Nifty and setup is like that we have a support very strong at 40,500. So yesterday also, we had tested 40,500 zones and we have bounced back. Today also, we have done the same. But the question is that we have a very strong resistance also at 41,000 to 41,200. So the range is in between right now. One has to either buy on declines to 40,500 or sell towards 41,200 zone. Likewise, Nifty, if we speak that the PCR OI, for Nifty 17,900 strike is roughly around 0.75 right now. And the more we sustain above this level 17,900, we will see a short covering leading towards 18,000 and 18,050 zones. So Nifty is better placed for the day than Bank Nifty because Bank Nifty we have a resistance on the immediate basis.
All right, and individual stocks, how would you play that, Shilpa?
I have 2 buys. One would be HAL. HAL trading at around 2638 zones now. It has a very strong support zones at around 2620. So intraday stop loss, tight stop loss of 2620, and one should look for targets of 2677 and 2710. The other one would be Cipla. It is a little contrarian view for the day, keeping in mind the yesterday's whatever, we got the governance issues. But Cipla, if sustains intraday this 960 zones right now, we might see a level of 989 and 994.
Okay, all right. Thanks a lot, Shilpa, for joining in and filling us in with your view on the index at a couple of trading calls as well. By the way, SpiceJet should be in focus. It's an interesting one. They are going to be mulling issuing equity shares upon conversion of outstanding liabilities. So some debt conversion is what they're looking at. There will be a dilution, on the equity base itself. And they could be considering some equity shares via preferential basis in the next few days. That's February 24th. Interesting to see, who's coming in here. If it's outstanding loans that are getting converted, how much of that? So we'll have to keep an eye on that front. We'll try to get you further details as well. For the time being, the stock saw a bit of an uptick from the lows of the day, but now holding more or less flattish. But a good time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat joins us to tell us about a stock that he's tracking closely. Bharat, over to you.
The ideas we would present is Mrs. Bector's Food Specialties Limited. The company posted better than expected results in the quarter gone by. Revenues grew 40%, driven by strong growth in both the bakery as well as the biscuit segment. The growth was primarily volume driven. Price hikes to the tune of 10 to 11% also aided in the top line growth. Margins improved by about 100 basis points, driven by softening of the commodity prices as well as price hikes taken by the company. The company is enhancing the production capacity in both the bakery as well as the biscuit category. In the domestic biscuit market, the company is on track to double its retail outlet reach to 3.2 lakhs by the end of next fiscal. For the biscuit exports, the company is also enhancing capacity in the select export markets. For the bakery division, the company is enhancing its network reach in the areas adjoining to the current operations, such as Mumbai, Delhi NCR, as well as Bangalore. The company has guided for an industry-leading high-teen top-line growth next fiscal. At the current market price, the stock is trading at a PE of 32 times its FY24 projected earnings. Investors can add the stock in the portfolio. Thank you.
All right, Bharat, thank you for that. With that, we'll step into a short break, but don't go anywhere because on the other side, we'll be chatting with the management of Lumax Auto. The stock saw a big move in yesterday's trading session on account of the acquisition that they've made of IAC International. We'll have Anmol Jain, who's the managing director, joining in to detail the contours of that acquisition and what it does for the company. Stay tuned. Welcome back. The market continues to hold on to gains of about 0.5%. So let's get chatting about individual stocks. One of them, which was buzzing in yesterday's trading session, was Lumax Auto. In focus today as well, the company is set to acquire 75% stake in interior systems and component supplier IAC International Automotive. Anmol Jain, who is the managing director of Lumax Autotech, joins in to tell us more about the acquisition. Thanks a lot, Mr. Jain, for joining in. Seems like the street is pretty excited about the prospects of this acquisition, primarily just going by the way the stock market reacted to this deal that you announced. Just wanted a couple of details. Is this business, the company that you acquired, an entirely debt-free net cash company? And secondly, what is the upselling opportunity or cross-selling opportunity that you have with this acquisition?
So good morning, Mangalam. Thank you for having me. So number one, we're super excited about this opportunity. It is a net cash company. There is no debt on this company except for minor working capital. Also, there are a lot of synergies. I think we have always looked at inorganic opportunities to grow on our core competencies of plastic injection, painting, and assembly. And I think there is a lot of synergies in terms of product cross-selling. Lumax Auto Technologies currently does a lot of products for the interior systems, be it the gear shifter systems or the power window switches and multiple others. I think it gives us to move up the value chain. We will be able to now not just integrate highly on the interior, but also sell a lot of our products as a system, as an entire module to the OEMs. So we're super excited about it. And of course, apart from just cross-selling to customers, we will also be able to add new customers to IAC's portfolio going forward.
All right. Hi, Anmol. Thanks so much for joining in. Well, I want to understand the funding. It's roughly around 600 crore acquisition. You said it's going to be a mix of debt as well as internal accruals. So split that up for us. How much of that will be debt? And also, you're buying 75% right now. Is there an option that you buy the 25% at a later date? If yes, how much do you pay for that?
Morning, Nigel. So number one, yes, it's a mix of debt and internal accruals. Approximately 15 to 20% of it would be internal accruals and rest would be funded through debt. The details of that are still being worked out. In terms of the, you talked about 75-25. Lumax has always been about partnerships. And I think Lumax is not an organization which goes into inorganic opportunities and turns things around. I think we believe in partnerships. We believe in the Indian market automotive market and the growth story. So for us, it was very important for continuity and sustainability of the IAC India operations, and hence we took a majority stake at 75. The 25 will remain with IAC Global. As I said before, nothing changes. It's business as usual. Technology support will continue to the IAC India business, and I think we see a lot of synergies which both of us can bring on the table, and we will expand from there. In terms of the 25,
will you buy? You'll not buy the remaining 25% as of now. You intend that they hold on to 25% and you'll work with 75% because you believe you'll want to work together.
That's correct.
And maybe at a later date, you'll look at buying the 25% out?
Well, no plans as of now. We'll cross the bridge when we get to that. But as of now, we want to continue with partnership.
All right. Could you give us a sense of what, the capacity utilization of IAC plants are right now? I mean, what is the peak revenue that this business can do for you? Will you have to make further investments?
So, Mangalam, I would not be having an exact details yet because, right now still the transaction is yet to be closed. I will be able to divulge more details as, once we are in the driving seat. But clearly, I think it's not a very capital-intensive model. I think if you look at asset turns, historically, they have been pretty healthy, much better than, let's say, what Lumax Auto Technologies has been doing in the past. Lumax Auto Tech is about 2.5, 2.7. This is typically much higher than that. So I think we don't envisage a huge capital investment going forward. But I'm not sure exactly what the capacity utilizations are, but there is definitely an upside on the installed capacities.
What's the gross block of the asset that you've acquired?
The total capital employed is about 200 crores.
200 crores. And the asset turns you said was much higher than the 2.5 that you guys would do.
That's correct.
So I presume that even if it's around 3, 4, closer to 5, could you give us a range?
Well, I think it's above 3 for sure. It's above 3 for sure. And again, there have been certain recent investments in, certain plant capacities which have not been fully utilized. So certain plants would be still sitting on idle capacities as we speak.
Anmol, but I think it'll be closer to the upper end because you're currently going at a run rate, the acquired business, by the end of this year, just going by the run rate that you're on, should at least end at around 620 crores approximately, 600, 620 crores very, very approximately. And it's doing margins of close to around 15% approximately. So let's just try to add the numbers together. You'll have a vision, say, for 2025, once this asset comes on and your core business grows as well. You're moving at a run rate of close to around 500 crores per quarter in your currently, the current business that you run. Plus, you'll be getting this business in, which is doing roughly around 600, 650 crores odd. By 2025, would it be fair to assume that you're in that vicinity of around 3,300 to around 3,500 crores of revenues? And margins, the acquired business has better margins. So do you think the blended margins could be in that vicinity of around 13% odd?
So absolutely, Nigel. I think, Lumax Auto Technologies by itself had very ambitious growth plans. I think, here specifically, we had a huge growth, not just on the recent joint ventures, but also aftermarket, which is an integral part of Lumax Auto Technologies. I think it has shown, a very healthy growth, and that will continue. That will continue even up to 2025 and beyond. But I think giving you a sense of number, it's too early, but I would be very bullish. Post this acquisition to 2025, the numbers you mentioned don't seem not doable. I would say that perhaps if the industry momentum continues, and we are very bullish on the passenger vehicle segment, and that's a huge shift which you will see post this acquisition, where Lumax Auto Technologies at a consolidated level will have a large presence and play in the passenger vehicle and SUV segment.
So just to reiterate, Anmol, around 3,500 crores approximately at current reckoning, with margins of around 13% is on the cards. Things could change. You could have some supply disruption, maybe demand gets affected. But by 2025, at least 3,500 crores with 13% margins doable?
I certainly hope so. But
all right.
Operating margin, yes, I've always maintained team EBITDA margins is what we wish to envisage, wish to achieve at Lumax Auto Tech.
That's what your shareholders would hope so as well. Anmol, what does this do to your current composition of revenue? I mean, your long-term goal is 1/3 PVs, 1/3 two-wheelers and three-wheelers, and the other 1/3 coming in from commercial vehicles as well as aftermarket. Now, if I look at Lumax, nearly a quarter comes from two-wheelers, 90% of your plastic business comes in from two-wheelers, whereas the acquired asset has 87% of its revenues coming in from passenger vehicles. So how long before you get to your desired revenue composition of a third, and third?
I think post this acquisition, we would be very, very close to that. I think passenger vehicle segment would pretty much pan out to be about 1/3. And two-wheeler, even though it will continue to grow in absolute amount, as a percentage, I think it would be ballpark around the similar pie, 1/3. And the rest aftermarket, as we go along, will continue to add value. So I think we will be pretty close to our midterm, long-term plan. And again, we will continue to build on that.
Right. Just a couple of quick ones before we let you go. Anmol, you had an enabling resolution to raise 400 crores in August is when the board took that. So is there a chance that you will raise that via equity to fund this, or will that be debt itself?
It will be mostly debt.
It will be mostly debt. And your aftermarket, it's currently about 100 crore quarterly run rate. You said that would double in a couple of years. Could you give us a sense of what are you looking at in the near future?
So aftermarket, I had mentioned earlier, in 3 to 4 years, we expect to double it. You're absolutely right. The run rate is around 80 to 100 crores a quarter currently, and we are on track in terms of adding new products to double that segment in the next, let's say, 3 years.
And the acquired asset has some aftermarket sales?
This one does not necessarily. This one is a more of an OEM play.
All right, Anmol. Thank you so much for joining in, giving us all those details. Wish you good luck with this acquisition. And like you said, 3,300 to 3,500 crores not off the cards by FY25. We will monitor that. Take a short break, come back, get you more on the markets and individual stocks. Stay tuned.
Well, ACC and Ambuja Cements, both of them are in focus because of a couple of reasons. The Himachal operations, well, they have restarted. Remember, from mid-December 2022, the operations were shut on the back of the conflict that they were having with the transporters out there, or the truck union out there. Now, that's got resolved amicably, and that's why they've been allowed to restart operations. To give you a quick, couple of numbers, the per ton, per kilometer rate, well, that's got revised a little bit lower for the 12-ton trucks. So that's good news for them. And also, they have fixed the 24-ton trucks. The rate should come up for you on the screen. The management says the overall reduction will be close to around 10 to around 12% in the freight rates out there. The impact is positive for ACC and Ambuja, and I say that because close to around 10% of their total capacity is from this region itself. So that's close to around 10% of sales that could, get a further booster shot. And also in these regions, well, the EBITDA per ton is relatively better. Profitability is good. So both those two work in their favor. In the interim, that's in the last couple of months, they will be producing it at another facility and then transporting it to these markets. Now they'll save on that transportation cost as well. So that's good news. The question is what happens to the remainder of the sector? And the price increases that we saw, in the last 10 days or so, will they hold out? Because now you have incremental supply that's coming in there. So let's see how that plays out, because we know in this region, prices were up by close to around 10 rupees odd. So we'll have to see that plays out. But nonetheless, good news coming in for ACC as well as Ambuja Cements.
All right. As a result of which, we are seeing some move on Ambuja Cements right now, sitting with a gain of almost 3% With that, I think we're out of time on this edition of Chartbusters. You stay tuned to CNBC-TV18. Trading Live comes up next.